Weird. It just kind of the mic just died. So if technical difficulties, guys, it happens. It happens. Just in case, we'll have this pulled up if it passes out again. But yeah, really to my point, right? If this we're gonna bring this to the front of the classroom now. So as it's pushing, you see things if they're really cranking up, don't necessarily feel like you have to chase them. Let them come down and pick you up. VWAP is a very good indicator as regards to where is a good place to buy. If I'm bullish, even though it's pushing, even though it's ripping to the upside, and you got a massive gap from the day before, just let it come down and pick you up. You still get a good fill. So we came in, we bought it down here, and look, boom, right? And there's a couple opportunities to take a buy. You took a buy here, buy here, buy here, buy here, and then wham, right? Takes off. Doesn't always happen that way, but it does a lot of times happen that way. Let me tell you, right? Now it's really cranking up there, right? So kind of hitting highs there as of right now, right? That is in catalyst. Now, why do we like XLF, and why were we screaming XLF from the mountaintops over the last couple of days, right? If you see here, XLF has a setup candle in an uptrend looking really juicy, right? As it crossed, this is your first indication to buy. This is actually your only indication to buy when you think about what I'm about to show you, right? So things are about to get pretty interesting. So we'll come back over here to our flex grid. We'll pull up XLF to the front of the classroom now. Because we're going to cover a JP Morgan, we're going to cover Bank of America, we're going to cover Wells Fargo, Morgan Stanley, and Goldman Sachs. And all of those were showing relative setup candles. So what are you kind of noticing here, right? XLF, this is kind of what we took to buy. You're getting double greens literally almost everywhere except for SPGI. So, right, momentum and trend overall for the entire sector looking amazing. BlackRock showed that same setup that we saw on XLF, right? Wells Fargo, same setup. Bank of America, same setup. JP Morgan, same setup. And we brought those to the front of the classroom kind of yesterday. Goldman Sachs, same setup. We're bringing all of those to the front of the classroom. Goldman Sachs, starting out, right? Very same setup. Zoom in on the daily. Look at that setup candle here. Boom. You don't have an opportunity to get in there, do you? Right? Earnings kicked in, went really good, fired off to the upside. Nice follow through. We caught that with XLF. Let's go look at Morgan Stanley. Same thing. Very same setup. Same setup. That's why we like looking at the flex grid, because let's say the ETF is rowing together, right, and pullbacks together, and then pushes together, you can get these massive, really massive follow throughs as the entire sector feeds into the hype, right? Same setup, right? Nice pullback, little juicy setup candle right here, right before earnings fires. You do miss that because there's a gap there, but we caught it with what? XLF, right? You also JP Morgan. So JP Morgan Chase, similar story, not exactly the same. It kind of rhymes. It's not the same, doesn't repeat, but it definitely does rhyme, right? Same thing. Earnings didn't look too bad. Massive push with the rest of the sector. Absolutely massive, breaking highs, and you had a multiple days of it pushing to the upside. So you kind of caught it back here. You could have been a little early with JP Morgan, and you would have had a couple days of chop, and then wham, absolute fire on the day. You would have been way early with JP Morgan. With vertical, you would have been getting some premium decay on your short side anyway. Let's go look at, I think we have JP Morgan, Morgan Stanley, JP Morgan, Wells Fargo. Cool. So you got Wells Fargo in the mix. Kind of similar story as all the others of them. If you're noticing the same thing that I'm noticing, look at this setup candle, right? But with earnings the next day, is there an opportunity to get into this play and you just missed the gap? Well, XLF, there was an opportunity. Not for me personally, but for you guys, there's definitely opportunity. Definitely opportunity, unless you're doing religious observance. So here is an opportunity on this day to get into that, stop out at the low. But we got in the next day on the pullback. So we did catch the gap on the pullback and the nice follow through. Why did we feel confident that it was going to be a gap and go with the follow through on the pullback? Because we had 5 out of like the top 15 of the XLF stocks throwing the same setup with earnings and a nice follow through. Okay. So it's very, 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 very nice, right? You can see XLF as it stands right now. Doing very good, up at 58%, looking very, very nice. We like that. Now keep in mind, as those XLF stocks start to slow down, XLF is going to start to slow down. But as it stands right now, very, very good pushing zone, right? Bring it also to the front of the classroom. OKE, we went on and rolled OKE today to the upside. We rolled it kind of high, so we wanted to take our profits as well as a lot of our premium off the table, remaining in the uptrend. This is kind of a juicy runner, right? So we took a lot of profits off the table as a regards to OKE, as it's like 58, 56, 58%, somewhere around there off this push. But there is a roll, but the roll is high. That's why we have the purple there at 115. The roll is high. That's a strike, 115. Before it was a 50-20, meaning our strike price was around 100-ish, right? Because I think the spreads are really wide here, right? The strike prices are relatively wide. Yeah, they're like $5 wide. So our at the money was 100, and the one we sold against it was like 110. And so we bought the 115 and sold the 125, right? So shout out to the vertical, man. For all my butterfly and vertical traders, shout out to you for sure. Love it, love it, love it, love it. We're making money today. Also ETN there. Similar setup, hasn't really got out the gates there, but we went on and took that play because we definitely want to see some pushing out, right? There's a squeeze on the board. Hopefully that squeeze can develop into a fire to the upside uptrend, and these guys are kind of offside. So you got this outside candle here, this outside candle here, offsides, and these guys are sitting pretty. They really haven't got paid. They've kind of been working against them. So to offload their positions onto the upside would be really, really nice for Eden. So you see it here first, guys. Unbalanced volumes looking green as it stands right now, and earnings is coming up. So hopefully we can get a fire or maybe a leak before earnings. Don't bank on it though. We'll see. We'll see. US, you got USO in the mix. We're gonna bring US out of the front of the classroom. Really nice push to the upside. If you notice though, pretty extended. So even on a day like today, when everything else you bring to the front of the classroom, the top bar here, everything is green. 1% on XLK, XLC is 1%, XLF is 85.85% there. Look what's the only thing that's negative, oil, right? Light sweet crude. So when you're looking at USO, really nasty pullback. Not nasty, but a pullback to resistance here. We did point to you guys on the rip. So we told you guys that the almost a month ago that this was developing and then it fired, and it because there was a channel getting squeezed into like a wedge, essentially it fires to the upside. Pretty nasty, but look, this it still respects what its price levels. So it breaks slightly above, pulls back to that level. We'll see if it can continue to push, right? It's respecting that. That's good. We had a buy bias on PCG. We did not go ahead and execute on that position for PCG. But if you notice, we'll zoom in, bring it to the front of the classroom on the daily. Setup candle did get a wash to the upside at 38 TAR. So we did something like that previously. When we go look at UNH, I just want to bring UNH to the front of the classroom to kind of show you guys what that could potentially look like. So UNH here. Reversion to the mean trade here, right here, bought here, sold here, got up to got all the way up to the 21 period moving average, relative, simple relative, and then it failed. So that's kind of why, right, taking it off on the first sign of danger is really, really important. As you can see, we bought here off the wash, only took it to the 8 period moving average. 8 period moving average on what? The weekly. This is a daily play, but we want to go ahead and respect our higher time frame weekly levels there. So took a buy here, took it off here, and as you can see, shout out to us for taking off at the first sign of danger, because danger did creep in. You could potentially see something like that potentially for PCG. There you go. PCG, massive drop there. So massive drop, setup candle, could potentially see it go to the 8 pair moving average. If I had to front run where the 8 pair moving average is, I just put it like halfway. So you can see halfway right here, boom. And if you take the buy, then 8 pair moving average, first sign of danger will probably be right there. That's kind of where you can guesstimate where price will be. Looking at PCG. Moving right along, DJT, Donald J. Trump, communication, right? So bull flag is currently present on that. I'll bring that to the front of the classroom right now. If you're looking at the daily chart here, we'll center it. But Squeeze did end up firing off. Their pretty nasty wedge fired off to the upside with a nice bull flag setting it there on the daily. So you could probably continue to see a little bit more upside, but sometimes these things break down. So I have heard that there has been some problems with the spread on this. So just keep that in mind. That's why we're a little gun shy on pulling the trigger on good old DJT. Moving right along, we've got VT. Now, VT, if you're noticing, right, we did have it potentially set to the downside originally, but as we get new data, we're letting the charts kind of speak to us and not necessarily imposing our will on the charts. It was considered a downtrend a couple of weeks ago, right? Moving average cross cloud to the downside set in for red, but now what does it do? Cross back to the upside. What do? Pivot our structure back to the upside. So this kind of murky environment can be hair pulling, but we already know what to do. We're letting the charts tell us what we should do and what should we be doing, right? Looking for a buy. So you get a setup candle here, did fire off to the upside. You can see it right here, but hopefully it pulls back. Those is another setup. We get an opportunity to get in to VT. GE. So good old GE, General Electric, right? You can see winds that are changing for all sectors as it stands right now, getting above that major resistance level, testing it, peekabooing below, and then firing, right? Bringing it to the front of the classroom, that peekaboo below, pretty drastic there for GE looking on the daily. But the first one, talking about this one right here, this broke below, broke above, retest. That's what you're seeing here. Broke below, broke above, retest, peekaboo below one day, and then wham, took off, right? There's really only one trigger to take a buy here if you were looking at it as an uptrend. There it is, break here. But we weren't looking at it as uptrend. What we were looking at it as a downtrend. So this right here for GE kind of gave us a heads up that, hey, this could be shifting to the downside. But with new data, we see the trend overall, high tide raises all boats. So are we a little bit more hesitant to get into the downside? Absolutely. As you can see, glad we didn't get into that. Two-bar professional probably would have had to pull that today. We already had to pull ADP, but that one was a little bit earlier. So we'll go ahead and change this to a downside trend there, just so we can have chart continuity. But yeah, if this starts to trend to the upside, awesome. We didn't step in the way of that freight train. Shout out to us. You also have AMT. I think American Tower, right? Yeah, American Tower. So American Tower here. One thing I also want to bring into the front of the classroom, your structure can be pretty wide sometimes. And this is kind of what we're doing with American Tower. We're bringing to the front of the classroom that, hey, your structure is a little wide on this, but the opportunities are still there. So if you look back, opportunity here kind of gave you heads up, opportunity here kind of gave you heads up, and the opportunity here kind of gave you heads up, right? We don't use trend lines as like triggers, like if it comes down and take the bounces off the trend line, we take the play. No, we're looking for our setup candle. We're looking for the market to tell us when people are stepping in, people are stepping out for real raw data and making decision off real data, not our own personal subjection. So trend lines are your own personal subjection. We just draw them on our lines to show that there might be buying pressure overall, or to identify structure and make it easier to see structure for everybody. So this right here, if we're looking American Tower, you do see a hammer candle here getting washed and then filtering through to the upside. Could have been a reversion to the mean trade. Take this, back up to the 8 period moving average, call it a day on the weekly. That's how I could see that. Just really a reversion to the mean trade. So watch out for that. But because of the structure, reversion to the mean trade could turn into something else. But just like we saw in UNH, let the market tell you if it turns into something else. Because if you're trying to guess at the market, if you're trying to guess at it, this is what I call being greedy. You're up and you say, okay, it starts trending up here a little bit more. I don't want to pull or make a decision at the first sign of danger. And then you get slammed. That's kind of the point. You don't know if this reversion to the mean trade is a reversion to the mean trade, high quality setup, or a continuation, which would be a lower quality setup. That is not a quality setup. If you believe just because you wanted to go to the upside that it will continue because, ooh, I caught the move to the 8, let me hold out for a little bit more. You can get body slammed right here. That's why we make a decision at the first sign of danger. Take profits, make a roll, do what you got to do. You see the cash, take the cash kind of deal. When we go back to American Tower, similar story. It's up at the 8 period moving average. If you took the play reversion to the mean, take the reversion to the mean trade, because there is a lot of times another opportunity to get the play as the trend change. Looking back here, is to the point. Let's say you take this reversion. Let me bring it to the front of the classroom. Let's say you take this reversion to the mean trade here. Boom. You take your capital, cool. And then you just got to wait for something to develop. Now, as it pulls back here and you're like, okay, here's a squeeze setting up here. So you do get an indication, because we do like to use traditional setups as well over here. You get a squeeze perched on top of a tight moving average setup, right? So you got the 8, you've got the 21 sitting perched right on top of each other, squeezed, right? Volatility is low, in an uptrend. What direction you taking that? You could take it and do the same thing. Like, okay, I'll take the buy 2-bar professional. If I get stopped out, I get stopped out. Awesome. And then it rips to the upside. Let the market tell you what it wants to do. Do not impose your will on the market. I wish I would have been there to I wish I was recording that when I was trying to make that decision, because this is exactly what I was thinking. I was like, this really could break this level and rip to the upside. Do I want to be privy to that because it's continuing on, or what? But I said, what is the market telling me? Well, the market's telling me high probability setup reversion to the mean, wait for a trend change. Do you get that? No. Boom, failure. So keep that in mind. Where do we take it off? First sign of danger. That's what our job is, to eliminate risk. So that's kind of the whole point. After American Tower, pretty much we kind of went over the these setups. Goldman Sachs, we bring him to the front of the classroom. We brought him to the front of the classroom already. A combination of Goldman Sachs, Bank of America, looking pretty. Feeling a little heavier though, Bank of America, so you gotta watch out there. Wells Fargo, Goldman Sachs, right? Bringing these guys to the front of the classroom. Very good stuff there. We got KMI. KMI is over here. F3 ATR, pretty nasty work, right? So if you're looking back, did you get any indication of buying KMI? Nice pullback beneath the 8. Between the 8 and the 21. We really like that spot, especially if it's looking like it wants to respect key levels. There was some indication here to go ahead and take some follow through off rotation. So you could always kind of take that, but also watch out for a reversion to the mean trade as it pushes. If it gets really gets cranking, you might be able to take a reversion to the mean trade as it breaks below like a setup candle that's relatively extended to the upside. So keep that kind of stuff in mind on the forefront of your brain. Netflix. Let's go look at Netflix here. Boom. Loving our Netflix. Potentially new setup, right? As the winds start to change on Netflix here, you're seeing rising tide raising all boats, uptrend, just like we saw in the previous one, pulling back between the 8 and the 21 pretty nicely. 21 period moving average still pushing up unbalanced volume down here. pushing up, and then you're seeing orders kind of be put in right here with a couple setups. This one not kind of getting peekaboo to pull back. Same thing here. So we want to see if there's another break, double break there. That's good. We like that. So watch Netflix potentially to the upside for a setup there. And also keep in mind though, earnings is coming up. So if it doesn't do it today or tomorrow, yeah, no comment, right? We'll see. Earnings has been the kind of 50-50, man. It can go your way, might not go your way. ISRG. Let's go take a look at ISRG here. What else we got? Gonna kind of blitz through this. ISRG. Look at that, man. Nice 3TR. Push all the way at highs. Did you have an indication to get into this? Very similar to KVM there. Your only indication was here at the right spot, though, at the right spot. So even with the setup right here, you get to break a high, take the buy, stop out at the low, respecting all your buyers. That's why we respect all of our buyers. So hypothetically, we'll put this here as to kind of bring it to the front of the classroom. To the point, if we're zoomed in here and we take let's say we take a buy here. Where's your stop? This is why we respect all of our buyers, because we got to give our play time to work itself out. This is also why we only risk what we're willing to lose. So here, right, KVM, you take the buy, you stop out at the low. This wide of a play, giving it time to play out, that's a lot. You got 537 to what? 537 to 516, right? $20 swing we're talking about. So if you're getting a $20 swing, only put on the board what you're willing to risk. That's kind of the point. You do your risk management on the buy. You make your money on the buy. You do not make your money after it pushes on the sell. You don't make your money up here when there's FOMO. You make your money when there's fear and on the buy, setting it up properly. That's why the last letter of the IOU is you. You have to formulate properly the trigger. You have to formulate properly the risk management. Okay. But we respect all of our buyers because on a pullback, it might come down here and wiggle around here a couple days before it gets chug-a-lugging train tracks in the other direction. Remember, you're talking about markets that move with momentum. So as winds shift, they might not shift immediately in the direction you want them to go. It might take time. You have to give your play time. You have to give your play time. Okay. So with that, yes, it's good to respect all of your buyers. So let it kind of play out there. ISRG, shout out to it. Uh, what else we got? We got BT. I think we might have brought it. Yeah, we already brought BT to the front of the classroom. We'll go UUP. There you go. The dollar, right? A couple setups initiated on the dollar there. The dollar index. Dollar bullish index, right? Essentially saw a nice juicy pullback right here. Setup candle to the upside, got washed, or setup candle to the downside, got washed in green territory. Wham! 4 days play. We like to see, if you guys have been watching my channel for any length of time, our plays typically are anywhere from 2 days to 3 weeks. So 2 days to 3 weeks. Why? Because it might take that long for it actually to play out. I'll bring 2 of those to the front of the class now. Charter played out in a couple of days, almost a week, right? The first day, you almost won 2 days, 3, 4, 5, 6 days. It played out perfectly. But the first 2 days, one of our plays was done, right? We had a butterfly play. That play went up to a desired level. We went on and sold that at where we needed to sell it at. So it was a 2-day play there, and then the rest of it played out for the week. But then you can have a position like the QQQ where it can be multiple weeks in tandem. So we'll bring this to the front of the classroom on the weekly. Taking a buy here, 1, 2, 3, 4 weeks in this play, making the decision, taking profits all the way up on the roll. Okay. That's why we get it for about 2 days or 3 weeks, because if it develops, we give our play a lot of time, but we kind of plan for that profit on the front end. Okay. We plan for those contingentalities and eventualities on the front end. So keep that in mind when you're looking at some of these setups. that you want to look at them as, 2-day to 3-week plays. They could develop into something where momentum gets going, and then you're in a great play. But if you've only got it for like a week, then you're trading, you're holding your cards too close to your chest. Got to play a little loose. Okay. Apple. Apple. Let's take a look at Apple here. Apple is interesting because while the rest of the market's pushing, you see the day before or yesterday, Apple took a drastic hit, massive hit, almost going from this rotational zone, almost completing the rotation down to 226. So Apple is a good company. We might start to see if we get to I don't think we're close to 3 ATR territory anywhere, but start setting in for, let's say if we get down to 220, maybe looking to get a buy bias there at 220 as it extends down this far to the downside. Actually, we'll do this, kind of showing you how to get this done here. So 220 as it pulls back, we wanted to get a little extended to the downside, maybe throw a setup candle down there, and we'll get a buy bias trigger. We want to get into Apple, get some more Apple stock. We like to get Apple maybe at a pullback here, right? But when you're taking, let's say you took a one share buy here for the rip, getting in, averaging in on pullbacks is what we like to do. Some people say, oh, average in whenever, right? Whenever you get paid. But for me, I don't think like that. I think like average in. If you want to get into Apple stock, pull your money, be disciplined, pull your money. And then when Apple pulls back to a level that's acceptable, right? When Apple pulls back, put it in there. So what you can do, right, is you can transfer money between accounts. So let's say, for example, you have Apple stock. Open with your broker 2 accounts. One account is going to be let you actively trade out. The other account is going to be where you just put money in and save it for something like Apple or Nvidia or AMD. Really, Apple, AMD that we're looking at, right? So as it pulls back to a good level, you take the saved money, put it over there, and bam, put a whole bunch of money on Apple. Okay. Or you buy it in that other account and tell it to do account transfer if you want to see it on the same account and want to track it in the same account. But that's how I do that. I'd rather buy, right, really good products when they're the cheap. I don't want to just put my money in as the market moves along. That's how I do it. You don't have to do it that way, but since we look at the charts every day, I don't see why not. It helps you with your discipline. PM. Philip Morris. So this is in a kind of a downtrend here. We're looking for the rip and a potential play to the downside if it develops that way. Now, high tide raises all boats if things switch. But as it stands right now, the 21 period moving average is neutral. 8 period moving average is cross below, right? You get a dead cross. The only problem I see, though, is unbalanced volume down here, indicator down here, still kind of trending upwards. So you got to just kind of keep in mind, like, hey, this might not be the best time to get this play. But if let's say the market starts to pivot down to the downside overall, and you see a setup candle here, take the play to the downside. Philip Morris, shout out to it. SRE. SRE here looking like a whole snack, right? Look at that. You did get a potential for reversion to the mean trade that did play itself here. Even though the play was really, really extended to the downside, we got a setup candle down here, reversion to the mean trade by bias and rips to the upside. So if you got this play, if you took hold of this play, essentially the play went from $79, 79.19 up to first sign of danger 85.21. Are you okay with that? I think most people would be okay with our SRE, that reversion to the mean play there. We did not take that because we were already, by bias on a lot of other things. So this play, even though it worked out, we were already long a lot. So we wanted to look for some down plays. Just nothing really materialized that we like. So yeah, missed out on this, but we did shout SRE out. Also, XLE, very not same story, but if you notice right here, massive candle to the downside, getting washed in about a couple of days. So you can actually take this trigger if you'd like in an uptrend, and then you're looking at highs here. Something that you could look at. It is a wider stop, so I would consider this if, let's say, the stop is down here. You could keep your stop tight, but the structure references it to be down here because of how wide this candle is, right? So with keeping with our strategy, Keep that in mind. Risk management, risk management, risk management. And last but not least, we got MO or Ultra. So developing what we thought was a developing downtrend, but as all high tide raises all boats. You see here's a setup candle kind of getting washed. Ideally, you'd want to see the opposite in a downtrend. It rips to the upside, throwing a green setup candle up here. And then as that gets washed or you cross below the low of that green setup candle, then we take the position to the downside. Okay. Not really seeing that here. So it is what it is. But you see ultra right. You see a green setup candle here fail. So that's why we like to take the ones on the flip side. Listen, we know that people are setting in on the move late. See, if the move starts here, massive selling, people settling into it, And then right here, people are setting into this a little late. If you wanted to get into this downtrend, you probably should have got in like around here in the middle where you 50-50 chance to go up or down. But here, it's kind of at the end of the move, right? You're getting into this stacked zone. So it's going to come into some headwinds. It's going to come into some resistance. So there could be an opportunity for a buy there, right? Not our ideal setup, so we'll pass on it, but it is on the board. So if you are a avid MO watcher, there you go. There it is. So guys, thank you so very much for tapping in with us. We did have some technical difficulties earlier with the mic, and even before that, is why this video is coming out a little late with the computer ended up dying in mid recording. So we're not immune to Murphy's Law. So shout out to you, Murphy, and shout out to your law, right? Guys, this is MC Fire. Thank you for joining us. Check out the previous videos and compare and contrast we've been throwing out. We actually put our first live video out the other day. So testing that out. We might start doing that on earlier parts of the week. But Friday's video, a lot of the plays and the setups have already kind of been established. So we just kind of recap a little bit and kind of show you what we've been doing. Yeah, guys. So we appreciate your time and we'll tap in with you soon. Have a good day and goodbye. Peace.